Bodke joins us with his thoughts on what is leading to such extended volatility. Ajay, good morning. Thank you for joining us. It's getting difficult. It's rather getting impossible to read into the market direction.
Good morning, Nikunj. I think I'll list out 3 or 4 worries that are lingering over the markets, and then we'll look at some of the positives which I believe should provide support and which should provide an opportunity for investors to buy into on weakness. I think when we started the earnings season, Nikunj, we were expecting around 4.7% growth in the earnings for FY15 as a whole. But as the results are coming out, the numbers are coming to be weaker than expectations. And as things stand midway between the result season, our current estimate for FY15 earnings has been scaled down from 4.7% growth YOY basis over FY14 to just 1.7%. So the earnings for Nifty for FY15 today stands at 412. And mind you, this is after stripping out the one-time impact of the massive write-off of goodwill that Vedanta did. If you were to consider that, I think the earnings growth would be still lower than 1.7% on a YOY basis. The other worry that is dogging the market is what about the expectations for FY16? Because the consensus expectations for FY16 even today stands at a growth of a lofty 18.2% growth at 487 rupees for Nifty. And the worry is that the revival in investment cycle has been pushed back by 6 months. It's only in second half that one is expected that construction, capital goods, engineering sector to come back after maybe one more rate cut. And hence whether that 18.6% also will hold true, or whether there will be necessity to cut it down to around say 13-14%, because when we started FY15 we were penciling in 15% growth in earnings and we are ending up with just 1.7%. The second negative that is worrying markets is what about the revival in investment cycle? Although the capital goods numbers in IIP for the FY15 have been on the stronger side, we still need to see some stronger
Right. So Ajay, are you trying to say that, don't be in a hurry to call the bottom and there could be further weakness ahead? Is that a possibility?
Yeah. So I think, just quickly I'll run upon one more worry essentially is some of the key economic legislative agenda has got pushed up. Not because of want of trying by the government, but because of rank political opportunism by the opposition parties, especially on the GST front. And also I think the expectations of below normal monsoons, which will add to the rural distress. But on the positive side, I think, with the inflation firmly under control, CPI at around 4.8%, we still see at least a 1 percentage point rate cut over the next 12 months, because the RBI itself has said that 1.5% real rate is what they are aiming for. So at 6.3%, assuming inflation remains at 4.8 and the repo at 7.5, at least a 1 percentage point rate cut over 12 months is what we are penciling in. Also, I think there are a lot of worries about crude having risen 40% from the bottom. But mind you, it is 40% down from $115 that we had seen in last June. And with the economy in Europe and Japan still in a state of funk, I don't think that the commodity cycle has much more to run from the current levels. So India remains extremely attractive, and we still are saving on a 12-month basis $40 billion in terms of crude imports vis-a-vis June 14, which is roughly 2% of GDP. So I think on the CAD front, we are extremely comfortable. And also Nikunj mentioned about rise in bond yields globally, leading to pressure, leading to concerns that there'll be outflow on from the fixed income investments in India. But that's not bad, because we are 10% on REAR basis, we are 10% overvalued. It should prove a boost to our exports, namely IT and pharmaceutical sector.
Well, Ajay, okay, so that's the broad macro. Now let's try and nail it down to what could happen to individual pockets. The Times of India today is reporting that there could be divestments that could be announced in stocks like NTPC, Indian Oil, etc. In a bad market, would there be a further hangover to companies of that nature?
I think both the companies that you mentioned occupy seminal positions in the sectors that they are present in. I think they define the sector, be it the oil and gas sector or the power generation sector. Both are extremely well-run companies, highly efficient companies, and there is always an appetite for good quality paper. Even if there is current wobble in the market, I still feel that if priced rightly, I think there is tremendous appetite for good quality paper like NTPC and IOC. Also, let's not forget that the government has given a reprieve to the oil marketing companies by taking it upon themselves. Any under recovery that could happen on the LPG front. Diesel already has been decontrolled, so has petrol. So I think the only burden that they'll have to share is on the kerosene front. So I think, and also the government's efforts to revive the power sector, ensuring transparent coal auctions, as also the bidding is on for revival of the gas-based power plants. So I think the building blocks are being put in place by the government in the core sectors. I don't see any reason why NTPC and IOC should feel any problems in terms of appetite.
Let's go to Ashwini.
Come in on this, on these select pockets in the auto and the auto component space. Ashok Leyland, splendid numbers, and it's come out in how the quarter has been for them. Motherson Sumi, the guidance was fairly strong as well, and the numbers weren't that bad either. Selectively, are there auto and auto components which are looking strong right now?
I would tend to agree with you fully. In fact, Ashok Leyland and Motherson would sort of rank as among the top buys with a medium-term perspective. And the numbers that both the companies have posted corroborate the fact that a revival in the MCV, HCV cycle in case of Ashok Leyland clearly is on way. We are midway. 47% growth in top line the company posted. If I'm not wrong, for the first time in 9 quarters, the company has shown a double-digit operating margin at 10.1%. I think we have a 1-year price target of 88 rupees in case of Ashok Leyland. And we are expecting a revenue growth of 31% in the current financial year, followed by 26% in next financial year, leading to bottom line growth of around a very strong 376% this year, FY16, followed by around 60% in FY17. Motherson Sumi, in addition to posting very good numbers, I think the vision that the company has laid out for the next 5 years is what would attract long-term investors. A target of $18 billion of top line over the next 5 years the company has forecasted. They're looking at, they're targeting a 40% ROCE 5 years from now. And a very strong growth in both India as well as in the European geography. So I think both these stocks remain, in our opinion, extremely strong buys with a medium-term perspective. At Motherson, we are expecting a target price of around 630 to 650 in the medium term.
Ajay, a couple of key earnings as well, and Lupin too is going to come out with its earnings. What's the expectation there? If briefly you could tell us, and what is it that you're liking right now? Are you buying anything into the pharmaceutical space?
Yeah, I think our top buy in pharma remains Glenmark Pharmaceuticals and Sun Pharmaceuticals. In case of Sun Pharmaceuticals, I think we believe that the sharp drop has only been on technical reasons that one has seen because of the Daiichi stock coming into the market, and this supply has now been absorbed. It's making a good consolidation, and from a medium-term perspective, one should have Sun Pharmaceuticals as part of one's core portfolio. In case of Glenmark, I think the story is that the company has raised $150 million from Temasek at 875 rupees per share, roughly 4% of equity, which will, in our view, be used to reduce debt. They have around $550 million of gross debt, $450 million of net debt before the paying off, hopefully, of $150 million by the company that they have raised from Temasek. Around 4 approvals they have received from US FDA this year. We are expecting 4 more approvals, 2 key molecules this year, and 1 very large molecule approval expected in next financial year. Overall, we are expecting from FY15 to FY18 around $450 million of free cash flow, net of cash, which I think should allay concerns that people had previously about the debt on the balance sheet. This should lead, in our opinion, to a strong revenue growth of 26% this year, followed by around 37% in next financial year, and 67% growth in earnings for this year, followed by 89% in next financial year. And the ROE should flare up from 26% in FY16 to around 33% in FY17. So from a medium-term perspective, I advocate investors to look at Glenmark Pharmaceuticals along with Sun Pharma in pharma sector. And a fall in rupee, I think, spells good news.
Okay, so Glenmark and Sun Pharma from the pharma space, but the stock from the FMCG space, which I want to discuss with the technical experts and with Ajay's United Spirits, from 4,000 to 3,300, it's been a quick slide for United Spirits, multiple concerns, and I guess marketmen and investors have realized that the marriage of Diageo and United Spirits so far has not been successful. Corporate governance concerns, the board of Diageo wants Vijay Mallya to go, he's refusing to go, and now fresh areas of about 200 crores have been claimed by one firm when it comes to that entire merger process. Ashwini, what does one do with a stock like United Spirits? It was a high-flying stock, and this high-flying stock has got grounded.
Well, on declines, it should be bought, maybe closer to 3,000, 3,200 kind of zones. This has to be bought because it remains in a bull market. It's a consumer product, and things are getting better overall. So I think if you accumulate it here, you should get 4,500 at some point.
Spirits, do you think it's a good time to buy into United Spirits? Ultimately, this represents the consumption space, and given what has happened to ITC, I guess United Spirits could be a no-brainer. Ajay, that question was for you.
Nikunj?
That's right.
Yeah. Nikunj, unfortunately, we don't cover United Spirits, so it will be inappropriate for me to comment. But what I can only say is that the parallels that you drew, they sort of represent the IMFL market in India with a strong domineering position. Plus, I think the kind of support that the Diageo brands provide globally. I think one can sort of look at Diageo from a medium-term perspective.
Just keep in mind before we